Hey, Mr. Grider, how are you doing this morning, sir?
Hey, yeah, good morning, Albert. And guys, 2025 already. Lots of things have happened, and it's going to be a great year. I'm looking forward to 2025. And we've got some challenging years over the last 3, 4 years after COVID. And so we're going to cover a little bit about that. But welcome to 2025, everybody.
Glad to be here. Glad to be here, sir. A lot of crazy stuff going on in Southern California lately, huh?
Oh, absolutely. For those on the call, I was talking to Albert as we're coming on to this morning, and I live in Northern California. Albert lives in Southern California, and it's just like there's one thing after another. And our thoughts, our prayers are out to so many people there in Northern LA area and those fires, and those as well in New Orleans that got affected with that. There's snowstorm, lots of cold in the Midwest and Northeast. Um, and that's coming off hurricanes and back to back in that happened in the southeast, right? So lots of things, just that has happened, and so we feel for that. We're all in this together, right? That's how I look at it, and we're here to help people. And honestly, this is why I came to non-QM, and I've been in non-QM since 2015. And it goes, why did you go to this product? Well, there's a lot of good people out there that need to move on with their families, get a new house, refinance to take care of college tuition for their kids, and those things that got shut out of the mortgage market because they didn't fit traditional guidelines. And so we're going to go into that and then where to find these non-QM borrowers, right? And kind of look at the demographics of that as we go into 2025. So I'm ready to go, Albert, and
Yes, sir.
hope and as we go through this, please put questions in. I take questions from anything you want, a non-QM industry, any guidelines, any questions you have on stuff. You can put those in chat, and we'll take those at the end.
Awesome. Thank you for that, Mr. Grider. So, welcome. This is our first webinar of the year. So, thank you again for attending another webinar here with Home Express. So, today we're going to be going over where to find non-QM business, just like we talked about, right? As always, we want to thank you for your partnership and attending all of our webinars. Some of the things that we're going to be covering today, just like we mentioned, we're going to be going over a little bit of a market forecast. Mr. Grider is going to share some of his insight and thoughts that he believes on, and what are some of the things that he's found out about what the forecast is for the market. Again, where to find these borrowers that are looking to do transactions with you, and how you can benefit of taking advantage of the non-QM products offered here at Home Express. As always, the presenters, Mr. Grider, who is our Senior Vice President of Wholesale Lending, myself, Albert Martinez, who is your corporate trainer. And today we have the illustrious Mr. Dominic Hart, who is one of our top RSMs here in the company. Glad to have you here with us. So with that, I'd like to hand it off to you, Mr. Grider.
Hey, thank you, Albert. This is going to be a great year, and I'm going to go through a couple things. I think that the first thing we want to do is just to do just a quick maybe mortgage forecast and look at what 2024, looks like, and then how that transition to 2025, and what does that look like? Where are we going to get loans from in 2025? And I think everybody's got that question. It's like, hey, we came through 2024. What's the mortgage market going to look like, and where am I going to find more business? And we're in the same boat as you, right? We're wholesale. We're dependent on you, and we like to have a great partnership with you. So before we start, Albert, maybe we should do a poll question.
Mr. Grider, I truly think that we should. Talking about 2025, big things happening in 2025, especially today. So you may be very well aware that today there's going to be a big bowl game, Orange Bowl.
Okay.
And my team, Notre Dame, is playing today, right? So we want to know, who do you think is going to win the Orange Bowl? Do you think that it's Notre Dame? Go Irish. Or do you think it's going to be Penn State? So what say you, Mr. Grider? What do you think?
It's Penn State. My wife's from Pennsylvania. She's actually in Philadelphia with my oldest granddaughter right now today. So most of her family are big Penn State fans. So since I'm on the air, it's going to be Penn State all the way.
Oh, Mr. Grider, you're breaking my heart right now.
I'm sorry, man.
It's all right. Well, it looks like the masses have voted, and let's see what we got going on here. Let's go ahead and let's share the results. And of course,
Okay.
The
You
Fighting
talked
Irish.
him into it. I'm hoping for a good, safe game. Everybody's healthy and highly competitive, right? I think it will be. I think this is going to be a really good competitive game.
Absolutely, sir. But those golden helmets do look beautiful, sir. So with
Okay,
that,
all right, all right. It's enough for Notre Dame, right? So, okay.
back to you, Mr.
All right. All right. So let's take a look at the housing forecast for 2025 and kind of look at that. So, and again, this is small print. You don't have to look at it. Everybody that registered for the webinar is going to get a copy of this, right? So, MBA forecast. So, we ended 2024 just shy of 1.8 trillion, which is light, right? So, I think a healthy marker is probably, people would say 2.5 to 3 trillion. The good news in 2025, it looks like they're forecasting just under 2.1 trillion. So that's a significant increase of 15-20%, right? Which is good. And then where are we going to find these borrowers and why is this going to happen, right? The other thing on this is I look at how they're forecasting the mortgage rates. This is more of the average Freddie Mac rate that they come up with. And through 2025, it's really flat. It's right around 6.5 throughout the year. I know right now we're probably edging in high sixes on the conforming side, maybe even 7. I haven't checked the 10-year. I think 10-year was down just a little bit, but it was up yesterday. And so it might be some fluctuations right on it. But the one thing I think that's kind of evened out this year, especially with the borrowers, I think they understand the rate is going to be in this range, right? People holding off, hey, rates are going to drop or rates are going to go way up. I think that's kind of slowed down where it's going to be in a certain range right here. And so they kind of know that. So we got some stability there. And so this is just one source. An MBA, again, in our industry, we try to forecast probably a little bit more forward-looking aspects of it. But also went on the next slide is bank rate on what they're forecasting, and you see kind of the same thing. It gives you a little chart of how the rates went. We started the year under 7 in 2024, went up to almost 7.5. Then we went down to the low sixes, maybe 6.25 range. Now we're back up, but they're saying somewhere in the 6.5 range. So that's kind of uniform out there. Now, I know there's a lot of things dependent on that because the Feds have kind of going with the 10-year. There's other factors, but they could lower rates if unemployment goes up. Other things and factors come in, but we only can control what we can control. This is kind of what it is, and we got to have a baseline for what's going on. So if I'm out there pitching and say, "Oh, rates are going to come down," probably not. I mean, it's probably in the mid sixes, right? We kind of know that on the conforming side, and on the non-QM side, it's usually 100 to 150 basis points higher at the lower LTVs. And so we know kind of where the rates are going to be going into 25. So far as the market conditions, I think it's going to be fairly the same as it has been. So that's one element. Okay, the next slide, we're going to go look at the non-QM market, right? It's more specifically, as Home Express primarily is a wholesale non-QM company, even though we do have some agency programs, FHA and VA. But non-QM, so I know when I started in 2015 in non-QM, very small portion. I maybe 1.1% of the mortgage market because it's relatively new going out there. So on this is from Housing Wire, kind of doing some studies on this, right? Non-QM market should grew from under 3% of the mortgage market in 22 to 5% in 2024, right? And it's actually going to grow more going into 2025 and beyond. And there's a lot of factors for that. And I'll kind of go into that. One is, the rates being kind of elevated, kind of where they're at. And then I guess there's more information out there for borrowers that traditionally got shut out of the market. There's more information out there and advertisements out there that, hey, you can get qualified for a mortgage loan and you can move your family on. So that is out there and really helping the non-QM grow. And thank you for your part out there too. A lot of people out there, most brokers I know have this part of their programs and offerings they make because they understand this is an element where you need, because this one borrower here doesn't mean it's not QM forever, right? This non-QM borrower could be a conforming borrower in a couple years. And every deal that you make, there's some study I looked at especially those that are newer LOs out there, is that when you work as an LO and you're building out your base, that most people come back to every 3 to 5 years, and then hopefully you get referrals from all that. So if you really work hard and take care of the borrowers you have, and you offer that you have, and you're completing with them, you're going to build up a portfolio of return business, right? Which is really good. And we hope we can partner with you so we close those loans and you can get the good references to close those and get more referrals. So let's look at a couple of products here because I'm going to go kind of focused on two. Non-QM, I'll probably say 75, 80% are two particular programs. One is for the self-employed borrower, which we all know the tax returns don't work, right? There's a reason why they're self-employed, right? And so I was looking at the growth rate of that over time. This is where you're going to see non-QM market growing. It's like in 2020, about 9.6 million, 2024 estimated 11.8 million, and it's growing at 5%. There's a lot of factors with that, right? It's like we've seen after COVID, people moving away. Inflation's there, so they've got side jobs or gig work that they're doing. A lot of people went 1099. There's lots of reasons why. It might be just a lifestyle, right? We kind of seen that. So this particular segment is growing and is expected to continue to grow. Okay, so we see the shift in the people's view of where they're working, where taking more control of their destiny. Now, that's one part. The other part of the 80% is investor loans, right? And I get this a lot, DSCR, all that kind of stuff. But I want to give you kind of a picture of that growth in the small to medium investor, right? So on the top lines of red is the small to medium investor. That's, less than maybe 5 rental properties that they own or manage on their own. And they decided, say, do I want to put all my, my nest egg or retirement things going into stocks, bonds? Maybe I need to make more of a effort into real estate, because we do know in real estate, it's right now we got two things. You got demand and supply, right? When I get these arguments, oh, there's not enough supply, not enough inventory. Well, inventory is growing. Well, is it demand, right? Demand would be there, I think, if we had the affordability, right? So I think I know a lot of people out there, especially first-time home buyers, people in their, late 20s, 30s, looking around and go, man, the affordability is not there. I have the interest rates a little more elevated, right? Homeowners insurance, right? That's a big thing. Taxes. And so the demand will be there at some point, and we do know there's less homes out there in the residential factor than what people want, and there's going to be a time of equilibrium where they're home prices, wages, and that where it comes more affordability. And if you can recognize that, you can get in geographic areas where you can get into a home, right, as far as an investor, and have that rent payment cover your mortgage payment. That might be a good deal for you, looking at the long-term aspects and for your portfolio of financial assets that you're carrying. And so we're seeing that growth in the small to medium investors. Okay, so with that, we'll go to the next slide, and we're going to look at some of the programs that we are before we get into where we're going to market for these and where you can find these. And we got some good examples for you. And Dominic's going to share some of the things that his team is seeing from his broker partners and getting that in. But when I look at these two programs, the self-employed, the bank statements, look at those, some calculations. There's other ways, but we're going to go more into prospecting for them. And then in the investor loans, we're going to kind of look at long-term rents, short-term rents, and where to market those. Now, I don't do a deep dive into these particular programs, but if you have questions, those, you can reach out to me. You'll have my contact information at the end. I'll get you kind of linked in with one of our highly trained account executives that can look at your deal individually and go over how to structure that deal, what that program looks like, and help you close more loans. All right, so I'm going to go over just a quick thing of self-employed bank statements. I'd say most of the bank statements come in for the self-employed are business. That's because that's where they put most of their revenue, right, versus the personal. But we're okay taking personal. They're a little bit easier. But what we find is most self-employed borrowers keep their money in their business account. But if you have the ones that do transfer or deposit into personal, we take 100% of the qualified deposits. But we do need to show that expenses are paid through a separate business bank statement, right? That their expenses are paid. So we're not hitting at that. Business bank statements, we usually take 12 months. Use our technology, use the XConnect portal, because you can upload those. We'll give you an answer in 48 hours of what income would be. We have a small questionnaire to fill out so we can put appropriate expense factor on that. And expense factors go from 15 to 90. And I always get this 90, man, that's a huge expense factor. No, not really, not for how that gets classified at that. There's a lot of self-employed borrowers that have manufacturing companies with lots of employees, lots of inventory, and their deposits could be 5 million a month going through that particular business, and that income would be high, and that's probably appropriate. And then you have the ones that have more of a smaller business, maybe at home, maybe 1 or 2 employees. Well, we know that's down to like 15%. And you can always use a tax account letter for that as well. But we're pretty good on that. And your account executive go over that and kind of estimate what we have on that based on a common sense approach. Now, on the investor side, I'm going to go over kind of a couple things, but I think this is out there. People kind of understand it. It's like the debt service coverage ratio is, does the rent income you're receiving cover your PITIA? That's really it. That gets you a 1. That gets you into that. Even at a 1, though, you got to understand there's probably other expenses for that. And so that's still a little on the aggressive side. We have streamlined conditions for that. Trying to get getting those older non-TRID. We can use the market rents for 1007 or 1025 if it's units, right? Refinance kind of the same way, those type of things. Or you can use actual rents, right? We'll get those on there for you. When we do business purpose loans, make sure it is business purpose for the cash out. If you have a borrower that wants to do a cash out on investment property for a consumer purpose, that's paying off personal debt, right, or using the proceeds to put down on a new primary, that is a TRID loan. And we do have a program for that as well on the consumer side, but you got to have TRID on that. So we do all the property types, 1 to 4 units, long-term rents, short-term rents. I caution on the short-term rents, make sure it's in a highly density area for typical short-term rents, and I'm calling resorts area. I've seen some things come through where they're trying to do short-term rents in areas where it just don't have a high density. And then I see some now they're going into long-term rents. So kind of pencil it out both ways. We do have a 20% expense factor we have on the rents on doing our calculation of short-term rents. And it goes, why is the difference? Well, on a short-term rental, typically the utilities are still paid by the property owner, right? And there's more maintenance or housekeeping and other things. There might be insurance. So we do apply 20% expense factor. So kind of look at both ways. We do have in our portal a retometer or rent-o-meter, if you will. You can put in the property address, bedroom count, put in your email address. Within a minute, you'll have comps on that. It's not one all, just kind of gives you a point, especially on a purchase, of what those long-term rents will be. But most of you guys know your markets pretty well. And some of the tips I always say is like, if you have comps on what that rent's going to be, provide that to your appraiser, to the AMC. Hey, these are some comps I see in the area, so they have that. Because when an appraiser goes out and appraises home, where are they going to get their rental data? Well, they usually go to MLS or some type of multiple listing service. And a lot of landlords on the long-term rents don't advertise there. They go through other sources and may not have that. So the more you have, the more data you have, it will help you through this process. Okay, with that, let's look at how this can expand. And I kind of shared this out, through other webinars we've had on this. But what if you're an LO in California and you have your borrower say, hey, I'd like to kind of diversify my portfolio out of stocks, bonds, and get into more of the rental things for American real estate, right? Great. You don't have to stay in California. You don't have to be NLS required in the states or in the black, right? So you see those in the South, in the Midwest. You do not have to be NMLS license. So you can look geographically out there. Maybe there's a property manager that's out there. You can look at that where you have people say, hey, this cash flows. This is a proper area, and I like it, right? Where rents go up and maybe the long-term appreciation. I do mean long-term. I don't think there's a real huge appreciation going to happen in the next year or two, but maybe 5 years from now, because I do know there will be an equilibrium that happens. So this is to give you an example where you don't need a license, right? You can originate, submit loans in the business purpose loans in those states that are black without having an MLS license. So we're not going to go into practical ways to find these non-QM borrowers, but man, Albert, I think we're kind of due for another poll, right?
I would say so too, Mr. Grider. As we're talking about where the people are finding, their prospective clients and so on, we may want to ask the masses what they think. But we also did have a question in the chat, which I think maybe we should address. And I think you already have, but I'll go ahead and I'll bring it up again before we go ahead and ask that poll. And it comes from David Kirshner. And he's asking, will you be emailing out the recording and slide deck?
Well, I think that's up to our corporate trainer. I know I can. What I do know is the slide deck is going to go out for sure. The recording, I know there's pieces of it that go onto our website and to our YouTube channel. So it's going to go on our YouTube channel. So yeah, who knows, right? I tell my grandkids, I guess there's a YouTube channel with me on it, right? So it's like, wow, all right, yeah, I guess it's part of the technology today, right? So anyway.
Yeah, so our marketing department, we will make sure that the slide deck is sent out, as well as a copy of this recording will be posted in our YouTube channel, as well as our website, which is available at all times. You can go to homeexpressmortgage.com and click on the webinars, and then they're available there for your review as well. So let's go ahead and let's ask this poll, Mr. Grider. Let's see what the masses think. So what is your preferred method of sourcing non-QM business? Is it real estate agents? That's a good one, right? Is it CPAs? Could it be social media, which is a new way of doing a lot of things? Or do you have a secret weapon and you're not telling? What do you think?
I love the secret weapon, man. Someone out there's got a patent on how to do this, right? It's a secret. Secret sauce. I love that. I love that.
All righty. So yeah. So the mat looks like
they're coming in. All right. I might take a little bit because they're probably deciding. I do a little bit of this. I do a little bit of that. I don't know.
Yeah, looks like quite a few people have the secret weapon. So let's go ahead and let's see the results, right? So it looks like the winner is real estate agents. Real estate agents.
No, I can see that. I mean, I really do. The purchase market. I mean, real estate agents out marketing too, right? Trying to get deals and advertising. You get with them. You can tell them, hey, if you got a deal here, go on. We got the agency or conventional, but if that falls out, call me. I can take care of your self-employed borrower, the fallouts and those type of things, and your small to medium investors, right? That makes sense. I'd probably say that's probably number one, and of where you get the relationship. And that goes into my practical ways to find self-employed borrowers. Relationships. Agreed. Absolutely. People do business, especially in the real estate sector or that kind of stuff, with people they like and trust. Right? So you need both of those. And how do you develop that, right? And I look at that and I go, well, just look at what you do every day or through the month. How many people do you connect with? It might be could be at the grocery store, and it could be at the church. If you go to church, those type of things. All these different things where you go out and you just connect with people and let people know what you do. The other thing too is how many of you have to get your HVAC serviced? Well, that guy's probably self-employed. Go to the dry cleaners. Right? All those people generally are self-employed, may not know that they're, may need a loan, not that, or where to go. And they went to the bank turned them down. They don't know where to go. right? Besides just the real estate agents and those type of things. But I'm going to tell you, you sphere of influence, if you could just expand that, you start here, with what you know, and you expand out and you connect with them. It's amazing how that grows in a relatively short time. It could be like, 3 to 6 months, just grow, and you just need to be out there and let people know. But I start with the relationship. So, Dominic, being a regional manager with us, I know you deal with a lot of our broker partners and account executives. Maybe give us a couple of good examples of where you're seeing self-employed borrowers come from and where some of our partners are getting these borrowers.
Yeah, thanks, Dave. Dave, we're seeing some great success from our broker partners who are connecting with attorneys and CPAs as of late. As a recent example, I saw one of our broker partners connect with a CPA and offer to be a referral source for them. And in the process of just having a natural relationship with them, the CPA yielded a loan where the borrower made quite a bit of money, but he didn't have a 2-year history of self-employment. So, however, as fate would have it, he actually did have similar work prior to that as a W-2 wage earner. And because of that, he was able to get a loan out of it, bring it to us, and then close it on our cash flow program. So that's one example. Another example I can think of is we recently had a loan officer reach out to an attorney as a referral source. The attorney had a case with the borrower that was going to require that he needed cash liquidation. And, that was just something that was evident. And so he connected with the loan officer for some help. The borrower had a unique situation that he had a W-2 job and a small business selling gift shop items. So if you can imagine that, right? But he wrote off like tons of expenses on his taxes. So what ended up happening was because he tried to refile prior and got turned down, the loan officer reached out to him, gave him some hope, said, hey, let's look at this. Let's look at your bank statements. Looked at the bank statements, saw that he made decent money at his gift shop business, and then also collected his W-2s. Well, he called one of our sales staff, and the result was we were able to use both incomes for one borrower, both the self-employment side hustle, if you want to call it, as well as the W-2 income. So again, you can see how Home Express is really, really good at sort of helping these self-employed borrowers. And this is a great place to get those loans.
Yeah, thanks, Dominic. And again, we are a true lender. We fund with our own money. These are our own guidelines, and we're a common sense lender. So give us our scenarios, right? Connect with one of our highly trained account executives. They'll help you structure that deal and get that deal in and fund it for you, right? So we're here to help you and love your scenarios, right? Just give us what you have here. Let's help you make some more money here. So the next thing we're going to do is practical ways now to find what? The small to medium investors, right? And again, the real estate agent's always top. And I agree with you on that, just like most people have that on there. You got to have that, reach out to as many as you can because they're out marketing for business too. And they go hand in hand for that, right? I also like the commercial. I've seen a lot of, believe it or not, still today, some of the private money deals coming in. So with that, Dominic, what are you seeing out there? Some of the lead sources that our broker partners are seeing and how they're getting about these loans.
Yeah, I mean, just like you said it, Dave. A big one though, beyond the real estate agents is I'm seeing these private hard money lenders. And what ends up happening is these private hard money lenders, they have a valid function in lending. But inevitably what happens is these people have decent credit, maybe not the perfect credit, maybe not the perfect ability to repay on paper, but they make money. They're high income earners. And at the long and the short of it is that private hard money lenders can only offer one thing. So I have seen loan officers link up with private hard money lenders and be able to facilitate permanent financing, where in reality, this hard money lender can only offer the same trick. In this case, they're able to expand and work together and sort of get more loans closed.
Awesome. Awesome. And again, I think everybody's out there, but I looked at 2024 and probably into 2023. And I everybody out there is kind of going out with these DSCR webinars. And I think it's good. Everybody kind of knows what it is, that kind of stuff. It's really important to look at your sphere of influence and kind of capitalize on that and try some other angles. I like the private hard monies. I like the property management company. I have a buddy of mine that has a property management company developed over the past 15, 20 years. And there's a lot of contacts there. Look at maybe they want to get another one, right? Or maybe they need some repairs done or want to, kind of beef up their current existing rental property, needs some upkeep, maybe new roofs, that kind of stuff. Where are they going to go get those loans, right? There's a good places to be. I love the social media. Like I was talking to some of our other sales managers this morning. I said, what are you guys doing on social media? Let them know what these products are out there, right? And where you do it. So the like and trust factor, working at your sphere of influence is probably the best way to go. And kind of look at it from a perspective today is like, how many connections are you going to get today? Right. And don't look at it as it's a loan today, but if you make more connections and let them know what you do, it will come around for you. And so I see some up there with the realtors investment seminars, those type of things. I think you'll see some of this as we look at kind of the real estate market for the country. There's some areas that are very challenging, right? And we know that, but there's other areas where some of these really smart small medium investors are investing in and able to get some of the cash flow out of that, and are looking at it as a good strategy for them. And by the way, the empirical data is here. Is like our submissions on these two products is probably double from what it was a year ago. Right. So what I mean by that is it was a little bit slower in into December, first part of January, but this particular first part of the year, submissions are really good. So those out there that are working hard, make themselves available, are getting deals, right? So kind of with that. So with that, Albert, I think we'll move on to the next. This is just a quick kind of overview of options because I talk primarily in two programs, but there's lots of ATR options, right? So we have P&L programs, we have asset programs. So I just want to know that they're out there for you. And all you really need to do is you don't have to be an expert on every program we have. What you need to do is like, I'm an expert at self-employed borrowers, and you have a go-to AE that can get these deals closed for you. Like I said, I see a lot of one-year full doc options, asset assist, or that's kind of an asset depletion type of program that adds into that. And we're okay with some life events that we understand that, hey, they had a problem in the, some type of medical thing, something happened with their job, but they're back out of it, and now they're ready to go. And they just don't fit traditional lending guidelines. We're able to help those. So So the recently expanded programs that we have for is our DSCR program starts at 620. That's going to be a lower LTV. We do DSCRs under one. And again, it's kind of hard to say. So why do you do DSCRs under one, right? So one is a lot of it, we don't have the right data. What I mean by that is like even these appraisers out there trying to get the MLS, we don't know what they're going to do on everything and fix up property, what rents this smart investor might get, right? And so we see that we go up to 80% on a purchase. You got to have over a 1-to-1 at that LTV and with decent credit, right? Consumer loans start at 620. We can go up to 90% LTV. That's on bank statements up to $2 million. All right. We can do, like I talk, a cash out on non-owner properties for consumer purpose. That's a TRID loan, right? And again, we're a true lender, so we make exceptions with compensating factors. Just tell us your loan. If it's a good loan, it's a good loan. Remember, since it's our money and our guidelines, we're able to navigate these exceptions on good loans. So tell us what deal you have. Give us your scenarios, and we'll be able to walk you through that. So with that, Albert, I think we'll kind of go into the questions section here as we wrap it up.
Absolutely, Mr. Grider. So it looks like we have had a couple of questions come in through the chat as you were talking. One of them, it looks like Kara, or I apologize if I mispronounced your name. Hi there, just got in. Will we be receiving a recording? I think We talked about that. Yes, you will.
Yes.
Kara, just to answer your question, we will send out a copy of this training deck as well as a copy of this recording will be posted on our website as well as our YouTube channel. And generally after every webinar, there's communication piece that will go out from our marketing team. The next question is from Eduardo, and it says, I logged into the webinar a little bit after I started. Question, do DSCR and non-QM programs have a temporary rate buy down?
That is a good question. I don't know what's out there from other competitors. I kind of do. There's some that have put that out there. But for the temporary rate buy downs, we didn't go that direction as Home Express, and there's a couple of good reasons why, and I'm glad we kind of didn't, is because that is a big payment shock down the road. We don't know what rates are doing. If I looked at some of these forecasts, they're saying it's going to be 6% range for the next 3 years. And I don't know if that's accurate. Sure, buying it down, then you have a payment shock. And I think they did that, try to get that in there. The one thing we do you can buy down rates here. We can finance discount points in your loan to get that rate down up front. So it is a 30-year fixed at a lower rate than what you think you could get. So we have options for you on that payment. And by the way, on DSCR, you can qualify that DSCR on interest only. And our interest only program is a 40-year term. That is, the first 10 years is interest only, then converts to 30-year fix. So they can have a really good loan here to set them up for the future.
Excellent. Thank you for that, Mr. Grider. The next question is from Merv Bannister, and he's asking, are you going to do vacant DSCR refinances?
Am I going to do vacant properties?
I'm assuming that would be yes. I'm assuming that would be vacant.
Yeah,
DSCR, yeah.
There's got to be a good reason why it's vacant, right? So one is, I'm older, so I've been in this business 30, 40 years, whatever you want to call it. Let's say over 10, right? And what you see on homes that are vacant is that you have a tendency not to be kept up. If without somebody there, you get some vandalism, right? And I remember seeing some podcasts that someone shared with me that the squatter says, I got a new real estate investment strategy. I'm going to go find homes that are vacant and squat in them, right? So I just say be careful. Now, when I say that is like there's a common sense approach. What if I bought a home, to rent out, and I got a good deal on it, or somewhat good deal. I don't know if there's that great of deals out there for that matter, and you fixed it up. I mean, you really did. So you bought it for $200,000. You put $50,000 into it to get it up to a standard, right? So it took you 3 months to do it, and now you're looking at, hey, I'd like to get a loan on that particular property. One is got to make sure the valuation's there, right? But we're able to do that, and it's not quite it's vacant right now because you rehabbed it, but you're marketing it for it. Now I could see that being a case for that. And again, you still got to watch the valuation. It's like a 200,000, put 50 into it. It's not going to be worth 500,000. It's just not, but reasonable. And I'm big on vested interest. Right? If you look at studies of mortgage losses and delinquency, really the number one factor is vested interest. So everybody that wants a whole bunch of cash out and they have no vested interest, I'm probably going to really look hard at that loan if that's a good loan. But yeah, we could do those that they're vacant, right? So it's a standard, right? Put it in there, bought it. Now it praises for 280, 300,000. My loan's 220, and they got some of their money out of it to do other things, get into a longer term 30-year fixed deal. They're safe on that. I'm all for that, right? So yeah, so vacant could be a case for the recent rehab properties.
Yeah,
but
it looks like
it should be marketed.
It looks like Merv added a little bit more. And he said, yeah, it looks like he said yes, just rehab. So it looks like
yeah. Well, we could look at those.
Excellent. I do have another question here, Mr. Grider, and it kind of has to do with income. And do we offer any type of assistance with calculating income?
Okay, so one is income's kind of broad out there, right? So income has a lot of factors. The answer to that is yes, right? Especially on the bank statements or your cash flow programs, because we're just going to ask you to upload the last 12-month business bank statements, right? Up at that, ask a few questions on a questionnaire. We're going to come back with you. Hey, this is what we can use for your loan as far as the income. Then you're going to go into tax returns, right? It's like, okay, is that what you mean by analyzing tax returns? The account executive can help you out, or they can go to their sales manager to kind of help you out with that if you look at that. But most of that's done on that end. W-2s are pretty easy. How do you add the two together? How do you do net rents on an income, right? Because we're a net rent income. That means you can combine all the rental properties they have and either come up with income or a liability in aggregate. So there's lots of things on that, and our account executives are able to structure those for you. So the answer is yes. We also have the technology on the bank statements. We understand that, and that's done by an underwriter coming right back out to you. Here's the income even before you sub in the loan, right? Just going to need to upload that. Let us know it's a self-employed borrower with the things we need to kind of give a direction to the underwriter on what expense factors should be appropriate.
Awesome.
Hopefully that answered it, Albert.
It does, Mr. Grider. Thank you. And then just to add a little bit to that, just to our account executives are able to grant you access to the portal, so that way you're able to upload all the necessary information for your income calculations. You're able to upload your self-employment questionnaire as well as the bank statements required, and we're able to provide that to you in a pretty good amount of time. With following up, it looks like Merv had an additional follow-up to his question, and it's so it looks like, yes, we answered the question about it being rehab, and he said, will you close before it's rented? He said, will you change your penalties on late payments? I haven't had a problem, but it caused hesitation on borrowers that read the note.
Okay, so I can ask our capital markets department on that, because that's out of my sphere of approval, right? Or it hasn't been brought up on that. Can we fund before it's rented? Usually there's times we can, times we can't. It depends on your situation, right? Is it rented out? Here's a copy of the lease. Boom, we'll go, hey, they're going to move in a while, right? So you just got to be careful of having vacant properties, right? And that are in for any length of time. So that's where from the credit perspective, or for the valuation and how it's being protected, you need to be careful of that. So kind of explain it out. Hey, this is what they're doing. You've got a tenant coming in, that kind of stuff. But yes, I mean, we could look at that.
Excellent. We do have another question from Trevor, and he is asking, wouldn't you use the rent schedule on a vacant house?
That is for the DSCR calculation, right? Or income calculation for that matter, right? But if you look at an income level, right, it's like who's renting it out, right? So one is you need to have documentation of some sort, right? So you can just say, hey, here's a rent survey for a vacant house. Okay, that's good. That's the market rents for someone that's out marketing for it to get it rented out. But if it's not rented out, there's nothing coming in. And so that's where you want usually something to say, hey, rent is coming in of some sort. So you're looking at some type of documentation on that.
Excellent. And
but
then
it's
just
not.
Sorry, go ahead, Mr. Brad.
No, let's go ahead. Go ahead. I'll answer the question.
What I was going to ask was, we do have a follow-up question, and it's, can I vest in an LLC?
Yes, you can. Yeah, we do a lot all the time, right? So we understand the small medium investor wants to limit the liability on themselves on that particular property, right? So the slip and falls, whatever the tenant is out there, and so they want the liability there for the LLC. So we allow the vesting of an LLC. We still require a personal guarantee, right? So on whoever's we can get into that. That's where you get with your account executive who that's going to be. It's usually someone with the most ownership in the LLC, if not 100% owner.
Awesome. Thank you for that. And then, going kind of, again, a question here that I think it's very good and very pertinent, and it kind of has to do when we're talking about our self-employed borrowers, maybe someone who hasn't been self-employed for a long period of time. And, the question is, when would a 12-month cash flow loan be recommended?
Okay, so our cash flow program is for someone that's that's kind of newer to the self-employed, but you got to be a minimum of 12 months self-employed, and I need 12 months of business bank statements. Okay, so that's it. And I'll give you kind of some examples. Let's say I'm a doctor at Kaiser doing my residency, been doing that for 3 years. I'm W-2 to Kaiser, and I opened up my own practice 18 months ago. Okay, so I'm managerial, kind of doing this function. I got my clients moved over here. That's something. So that W-2 position should be supervisory, professional type of position that move into the self-employment arena for that. So they're already kind of operating in a kind of an ownership. It's not even it's not ownership. It's managing the business, and so they're already doing that in that same line of work, going into the self-employed. And so you can do that with attorneys, right? There's other cases, but that's just some examples for you.
Awesome, thank you. We do have some more questions that have come in through the chat. The next one is from Trevor, and it says, on a DSCR purchase, can you use 100% of the rent schedule predicted income?
Yes, again, you got to make sure the comps are there, right? So, I mean, I go into this and say the possibility is absolutely you can use the 1007, right? The market rents on the 1007. It's a purchase. Here's my 1007 on SFR condo. Boom. Here is that market rents, right? And here's the comps that are similar in that area. I don't want comps 20 miles away, right? So, so when you're looking at it, just make sure that the data is valid, right? So it's most relevant to it. But yeah, you can use the 1007. For market rents.
Excellent. Thank you for that, Mr. Grider. We do have a
right.
question.
And again, the vacant is really the refinances. We understand that someone purchasing a home, you're going to use the 1007 or 1025 as units, right? So I was probably tailored to that. So I want to make sure I cover that. That's on a purchase. We understand that it's vacant. They got to go in and then market for it. So purchase, it's totally understandable that it's vacant. It's really the refinances on rehab properties like that gentleman was asking about, which are great questions, by the way.
Awesome. Yeah, I agree, Mr. Grider. We have a question coming in from Michelle, and she's asking specifically for a DSCR loan. How many months after you close a hard money loan can you refinance to rate and term? And then the follow-up to that is, and how long to cash out?
There's a lot of questions, and I'm glad you bring this up. This is where non-QM is slightly different from the agency guidelines on this. So what we look at is more of the vested interest part of it, right? So let's say 90 days ago, bought a house, right? Fixed it up, got my hard money deal because it wasn't lendable even in a non-QM, it's two stuff, right? Now you want out of the private party deal, rate and term. Okay. Really, the only question we have is the valuation, not the seasoning time on it. So this is where we're a little different. Does it make sense, right? Okay, yeah, okay. I need to get out of my 12% loan and I need to get into a 7.5%, right? And pay off private money. So it's not necessarily a matter of time. Did they fix it up? Was it done? And what is the valuation of that? And then you're going to rate and term. And it'd be that way with like even on the cash out. It's not a matter of so much the time, right? So if you go into agency world or prime jumbo, 6 months for a cash out, well, that's not necessarily how we look at it. But you got to be careful of getting cash out all the time, all that kind of stuff. Does that really make sense? If someone's using it like an ATM machine, that's what we're looking at. But it's not necessarily done how your mind thinks of, hey, I got to wait 6 months or a year for that to do a cash out or a rate and term transaction. It's more of understanding the loan and does the valuation make sense or is it a common sense deal? So there is no set like, you can't do a cash out loan unless you owned it for 6 months. What if I went out tomorrow, not to say I can, bought a house for $1 million? Okay, bought a house for $1 million, right? And then shoot, I made a mistake. I actually need 500,000. So next week after I bought it, I want 500,000. You can call it, there's different things for that, but that could be a case where, hey, I need the cash out. All right. And again, that would be making sure, though, I put my own money into it, right? It's not like someone gave me the money, boom, I'll cash out and pay it off. There's nothing like that going on. So I want to make sure you kind of understand kind of this. That could be done. It's not like it's a time Or you took cash out and need something else a little bit later. But I'm cautioning you on churning loans. Don't do that. The loans are expensive, right? You're trying to do the best loan you can for that person right there where they don't have to refinance again, right? For some time. Or maybe the rates go down so it's more favorable or those type of things. Because it costs a lot of money to do a loan. You know, the inflation's done, closing agents, title, all the stuff that goes on, it's expensive. So when I look at it, try to do the best loan you can for that. But again, paying off the private party, those can be done. It's not like a time. It really goes into valuation and vested interest they have in the property.
Awesome. Thank you for that, Mr. Grider. And it looks like we have a couple of questions. We have one that says, if you have a bank statement client with a side job W-2 wage earner using combined income to qualify, will you be asking for a 4506 transcript? How does that work?
No, we do not ask for the only time you're going to ask for 4506, and that's on tax returns. Okay, so no, so I caution. I know Dominic talked a little bit about this borrower that had, you know, a W-2 job and a side hustle, right? Okay, I think that goes along. That's out there a lot, right? I just do, and they forget about the side hustle income because their DTI is not going to work on this. They don't know what to do. But the only thing I can do is that it just goes in the same principles of lending. If you got two jobs and you're running them, I need a 2-year history of you doing both. Right. Once you do that, I got the bank statements for that I can show the deposits for the side hustle or the side business they have, and I have the paycheck stub W-2, right, for the W-2 job. That's it. We're not going to 4506 it.
Awesome. Thank you for that, Mr. Grider. Eduardo has a follow-up question, although it's not non-QM related. I think it's a great question. He says, our long-term AE joined Home Express recently, and he mentioned that you, Home Express, have the best FHA rates. Do you offer a FHA VOE only program?
Gosh, man, I wish I was such an expert. Okay. The answer is yes, but be careful, right? It's like, and because we look at the VOE program, and honestly, it's just way I think, and I've been doing this in lending. I've done FHA loans, conforming loans, Freddie, Fannie, done them all. Is that when I get asked for a VOE only program, the first question I ask is, why can't I have the paycheck stub? Okay. You know what I'm saying? It's like I look at it, go, so our VOA program got to be from the Work Number. So we got to have something independent that comes out to this. So the answer is yes, but be careful what it is. And that's where kind of where I've seen some of those deals come in. It's like I can't validate it from the appropriate sources, the VOE. Right? We're not just going to take, you know, this employer. I got to have something else with it, right, to make sure I have something independently validating that. And so I think that's probably it. So we do, but I just caution you on how that works.
Awesome. Mr. Grider, we've gone through all the questions. I think we did an outstanding job today, and we're almost at the top of the hour. So
yeah, no, I just thank you guys for your input. I mean, this is awesome, right? So I love answering questions. And Albert, maybe you can go to our screen here, put my contact information up. I don't know if that was up. So you guys can email me and we can get you into, get you aligned with one of our account executives that can go out and structure some of your loans that I think you guys have out there. So this is great.
Awesome. Thank you for that. Yeah, Mr. Grider, I've just reshared your contact information. Dominic, if you have any closing words, sir? You're muted, sir. Sorry.
No, other than thank you for choosing Home Express to work with. We value your business, and please reach out. No question is a dumb question. Please reach out anytime you'd like.
Awesome. So again, thank you everyone for attending. We appreciate it. And again, as we mentioned earlier, a copy of this will be sent out. The deck will be made available to you, as well as this, in case you want to watch the video all over again and rehash some of this information. It'll be available on our YouTube channel. With that, we'd like to say thanks, everyone. We'll see you next month with another great webinar. Thank you.